Hey guys, thank you for tuning in. I am Divinity and this is Accounting Avenue with D. Last week we focused on the importance and elements of accounting and I provided a quick little quiz. So I'm just going to add the answers for you guys. Today's lesson will be focusing just on the concept of debits and credits, other known as the double entry system. So the double entry system, this principle can be summarized into one simple sentence. For every debit, there has to be an equal credit. Debits and credits work together to keep the accounting system and transactions balanced. So in accounting, each account actually behaves differently depending on whether it's an asset, a liability, revenue, or an expense. So let's imagine you have a bank account, right? So there are two ways money can move in and out of your bank account. The first way is through debits. This is money that is taken out of your account. Secondly is credits. This is money that can be added into your account. So it's important to note that the debit and credit system are affected differently depending on the nature of the transaction. We're actually always keeping track of changes in multiple accounts at the same time. I have a very effective method that helps me navigate how to treat each transaction. I call it the dead click system. So you need to take note that debits are always on the left hand and credits are on the right hand side. That is accounting law, okay? So it's very important to understand that. So underneath debits, D is for debits, we have E for expenses, A for assets, and D for drawings. Underneath C, which is for credits, we have L for liabilities, I for income, and C for capital. So we're going to add plus on each side. This is just to remind yourself that the accounts only on this side increases and the same for the other side. So all accounts under debits, they increase for debits, and all the accounts for credits, they increase on that side. So there are three questions you ask yourself when recording transactions, right? Number one, which accounts are involved in the transaction? This requires us to truly examine the transaction that's happening and try to investigate it's usually two accounts, but try to investigate which two accounts are being affected. Number two, classify which elements the accounts are attributed to. So remember in the previous lesson, we learned about the elements of accounting: assets, liabilities, owner's equity, expenses, and income. The account in the transaction, to which element is it attributed to? In the same question, is it on the debit or on the credit side? This is where the dead click model comes in to help you just quickly navigate which side it's on. And number three, is it increasing or decreasing? I'm going to do a few practical examples using the click dead method. I call it the click dead. It is obviously the dead click because the debits come first, but it's more easier for me to say click dead, but you can say however you want to say it. Just remember that dead is on the left side and click is on the right side. All right, so let's look at the first example. You have started a new business. It's called Home Lux Store, and you sell luxury home furniture and products. So this is the couches, the tables, kitchen utensils, etc. And you've opened a bank account and deposited 50,000 Rand as capital contribution. So we're going to look at the three questions so we can answer how this transaction will be treated. So number one, which accounts evolved in the transaction, or which accounts are affected by the transaction? In this transaction, that would be bank, right? Why? Because money is being deposited into the bank account. Therefore, the bank account is receiving money. So the value of the bank account is changing now. So it's been affected, okay? And capital, because of the capital contribution, that is an account of itself. Classify which elements the accounts are attributed to. Is it on the debit or on the credit side? With this question, we look at the click dead module or the dead click model. So let's look at that real quickly. Let's start with bank. If you remember from the previous lesson, we mentioned how bank is a type of asset. And assets are on the debit side if you look at the model. Capital on the other hand is clearly placed on the credit side of the model and falls under owner's equity. I just wanted to make a side note. The capital account and drawings account both are part of owner's equity. Even though they're on two different sides of the click dead model, just know that they both affect owner's equity differently, but they are still underneath owner's equity. The third question, is it increasing or decreasing? So when we look at the transaction, we can see that it says you deposited, meaning you put your capital contribution into the bank. Therefore, your bank account increases, right? As well as your capital account, it will increase. Okay, so let's look at another example. Home Lux Store purchases good quality couches to the value of 15,000 Rand from a supplier. The amount was paid in cash. First question, which accounts are being involved, or which accounts are being affected? Right, so Home Lux Store has bought couches so that they can sell the couches. So they're buying the couches for the business. Therefore, that is trading stock or inventory. The second account is we have to pay to attain these couches. Therefore, our bank is affected. Second question, classify which elements the accounts are attributed to. Is it on the debit side or on the credit side? Let's look at the model again. Inventory are business assets, which is on the debit side. Bank is an asset as well. Therefore, it is on the debit side as well. The third question, is the account increasing or decreasing? So this question, this transaction rather, is a little different to the first one. The number of couches or inventory is increasing because we are buying more for the store, right? Because it's increasing, it stays on the debit side. In terms of the payment made, we are purchasing with cash from our bank account. So we're taking out money from our bank account so we can make a purchase. Therefore, the bank account is what? Decreasing, meaning money is coming out of the account. I hope you understood that. Do you see how it's important to understand your elements of accounting and understand which accounts fall under which elements? This is why I wanted to start with that as our first lesson, because it is paramount that you understand the elements of accounting, because it's just going to keep dragging on to the next lesson and next lesson. So please make sure, if you do not understand, go back to lesson 1, and focus on understanding and memorizing the account. Okay, so let's do one more example. Your friend Lisa loves to decorate her home. Her birthday is coming up and you decide to get her a coffee table for her living room. You take the table from Home Lux Store that is worth 5,000 Rand. Right? I want you to note, you, the owner, takes the table from your own store, from your business, that is worth 5,000 Rand. So just keep that in mind, please. Number 1, which accounts are being involved in this transaction? So in this transaction, it is clear that there is no payments being made, right? But rather, you, the owner, are taking something from the business for personal use. This is what we call drawings. Remember from lesson 1, that's what we discussed. And the coffee table is trading inventory as it belongs to the business. Classify which elements the accounts are attributed to. Is it on the debit side or on the credit side? So drawings form part of owner's equity. Remember I told you earlier, which is on the debit side, right? If you look back at the model, the click date model, you will see drawings is on the debit side, and the table, which is inventory, therefore an asset, is in the debit side as well. Is the account increasing or decreasing? So because you're taking away something from the business, the owner's equity decreases. Your investment that you made in the business decreases. And because the assets are also being taken away from the business, assets decrease as well. So please guys, I want you to really get familiar with this the double entry system and the click did module, because in the next lesson we will actually look into the accounting equation, which is basically the same concept, but we'll be working things out differently, right? We'll be adding the answers in differently. So I wanted us to just ease in slowly into this lesson so that you don't feel too overwhelmed. So that's it for the video. Thank you guys for tuning in. There'll be a little quiz that'll be added just to test yourself and get familiar with today's work, and the answers will be put up in the next video. See you in the next video.